Ladies and gentlemen, welcome back to the channel. This is going to be an exciting video. We are going to talk AMC stock this week, my expectations, what's going to be happening in the market, specifically on Wednesday, and you need to hear this information. So we're not going to waste your time. We're going to jump straight into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. As well as that, hit the like button if you are currently invested in AMC stock. Let me know down below in the comment section if you have sold, if you have reduced, if you have bought and more. Let me know. At this point, I believe you have taken the max loss anyways. There's really no point on a risk to reward basis to sell at this point. Obviously, I'm not a financial advisor. Contact one if you need any help out there, and don't listen to me as financial advice, but I think it's pretty safe to say your next 50% from here likely going to be to the upside. Now, a 50% move from here would take AMC stock back to about $12 per share. Now, 50% down would take AMC stock down to about $4 per share. Considering the average analyst price target on AMC stock is about $21 and some change, it makes a lot of sense why the next up move is probably the next move is probably an up move, and that is because AMC stock is at $8.36 per share. Now, here in the short term, things can be quite volatile. The stock can move up and down, but I do believe the low is in at $7.05 per share for a couple key reasons. One, the 8-day moving average. Well, you're now above that, and you have been getting disrespected at this 8-day moving average over the last couple of weeks now. You have respected it to some degree when you have been above it. And as you can see right here, that was one day. That was September 5th. So this week, especially the beginning of the week, is going to be important to see how we react to this 8-day moving average. Usually you get utterly disrespected at this level as of recently, ever since the initial plunge from now split adjusted prices of the $50 range down here. Once the judge approved the court proceeding down to 30, rallied back up to the high 30s. And then ultimately sold off from there. From this sell-off on August 21st, you have been getting disrespected at the 8-day moving average. You've only been above it one time, and that was back here on September 5th. And now you're actually above it again as of Friday. Now, Friday was very specifically important, and we talked about this in the last video, but hey, why not throw it in here? Everyone needs to hear this. Friday was quad witching. Friday, was a $3.5 trillion notional option expiration, so there was a lot of money that moved around. Now, the interesting thing about September's quad witching is a lot of hedge funds and institutions' fiscal years actually end at the end of September. So this quad witching frees up a lot of capital, and you see a lot of capital making those end of the year kind of adjustments. So it looks like capital flowed into AMC as a lot of hedge funds and institutions are ending their fiscal 2023 year, setting up for 2024. So indeed, you did not see a lot of selling of AMC stock just across the board on Friday when the NASDAQ was down 1.75%. And I'm sure short positions were being taken in AMC stock. So the buying pressure well outseated the selling pressure. AMC stock ended up closing almost 3% higher on Friday. Not that many stocks did well on Friday. To see AMC stock up, and by 3%, was quite notable. So I do think that really is a precursor for the next couple of weeks, in which could be pretty bullish for AMC stock and could get us to that 50% up move from here. Again, would take AMC stock back to about $12 per share. Some of the other reasons why I believe the next couple of weeks could be exciting for AMC is, one, the MACD, which is negative, severely negative, but just went positive on a short-term basis. That means the yellow line crossed above the blue line. That is short-term positive. Now we're going to need to see a lot more greens to get the MACD actually into positive territory. But I think it's one of those things. The stock has fallen so much. The MACD is so negative. The RSI is so negative at 27.15. It's been oversold since August 22nd, almost a month. Come on, give me a break, dude. What I'm saying here is not crazy but by any stretch of the imagination. I think it's actually crazy to sit here and say AMC stock's going to continue to fall. Now, question is, at that point, what do you want to do in your portfolio with your position? That's your biggest question. If you expect an up move, what? Do you want to buy more shares? Do you want to wait to sell? Do you want to buy some options to play some leverage? What do you want to do? Let me know what you want to do down below in the comment section. What I want to do is play some options. Get some short-term gains, some tendies, baby. Makes no sense for me to average down on my position when I'm already down so much. I'll just hold that sucker and try to make up the difference in some longer term options, not short term babies, long term babies. Think about a real baby. Do you make a baby for 2 weeks? No, you make a baby for years. Look at the years on the options. Best way to lay it down for you, no pun intended. Now, let's go ahead and get into everything you need to know as far as data-wise with AMC stock. You got a short score of 70. Not so great, not so bad, kind of in the middle, so-so. $201.57 million worth of short positions currently in AMC stock. Estimated short interest of free float, complete baloney at 15.7%. Free float out on loan at 13.2%, just doesn't make any sense at all. Shares out on loan 26.11 million. Days to cover 2.18. Cost to borrow 5.75%. Utilization of about 60%. You got to take these numbers with a huge grain of salt. We've talked about this before, but hey, again, we'll talk about it here in this video so everyone's on the same page. The amount of shares has been exploding recently that are sold short, up almost 36% since August 31st. The last exchange reported short interest, well, from August 15th through August 31st, the amount of shares sold short jumped almost 36%. Maybe that's the best way to put it. It jumped over 6.1 million to be a little bit more exact with you, but AMC did dilute shareholders in that time frame, created more shares out there in the marketplace, so the short interest actually did fall from 29.24% to 16.44%, but in all reality, the stock is more squeezable, more short today than by far it has ever been. You've never been this short before. Not even close. So pick your poison, whichever one you want to roll with it and have your conviction. Does the short interest matter more, or does the amount of shares sold short matter more? I believe both, but in the grand scope of things, I do believe here in the short term, or until we really see a squeeze, the amount of shorts, the amount of shares sold short is a little bit more important, especially if you're looking at what has happened recently. Back on June 15th, you had 13.84 million shares sold short. You have 10 million more shares sold short. That's up almost 100% in the course of like 2 months, 3 months. So I think that is very important, and you should keep that in mind. Now, if you take a look at some of the other factors, one of those that I like to talk about quite often is the put-to-call ratio. Put-to-call ratio has been dropping off of a cliff, and I expect that will continue to do so. Now, when AMC stock stopped performing well was basically when the put-to-call ratio started going higher. And it's been at record highs. You've never seen anything like this. Not even when AMC was at $70+ per share on this split adjusted prices. I mean, that would take AMC stock to like $700+. So we'll see what ultimately happens. That would be crazy, wouldn't it? But you're buying AMC stock at a lower point than you were at in January of 2021. So I mean, it's simple. Should AMC stock be lower than you were in January of 2021 when the business was about to literally go bankrupt? Probably not. I think that's a fair assumption. I think that's a fair statement. And that's why I do believe AMC stock is going to go absolutely buck wild crazy over the next coming weeks and the next coming months. And I think it's a really good risk to reward to buy AMC, better than it's ever been as of right now. But again, you want to watch the put to call ratio. Don't let me get too distracted. Watch the put to call ratio. See if that continues to go lower. If it does, that is great news. And I do realize a lot of you guys don't have order text. So if you don't have order text, I will keep you up to date on the put to call ratio. Just make sure you are watching these videos twice a day, every time they come out. And it's just what you need to do if you're in this trade, because we keep you up to date and informed. We've never taken a day off in years, not even on Christmas. Go look up Christmas of any year, the last 2 years. There has been at least one video put out. Probably should have taken Christmas off. But hey, I love doing this, and hopefully you guys like watching these videos. And hopefully we start to make some money pretty dang soon. I think that's what you guys ultimately like. But let's go ahead and get into some of these FTD numbers. Like I said in the last video, you got a lot of FTDs. You got like 51 million that peaks out here on September 27th. That's when the FTDs need to be closed out of. Now, they do start to fall after that, and that's a big reason we're not on the threshold securities list as of right now. But you still do have like over 100,000 failure to delivers that come due on October 5th, which 100,000 FTDs is a lot larger than even what you see on like an Apple or a Microsoft or Tesla for that matter. So there's obviously a lot of illegal activity still going on. So you want to keep that in mind. But it looks like it has died down a little bit, at least for now. And again, to the point that we made earlier, quad witching, $3.5 trillion of options expiring, or notional value, shall I say. It was a big option expiration last week for AMC stock. You had a lot of calls in the money. You had a lot of puts in the money. It was a little bit more skewed towards the puts, obviously, as it has been recently. But you still seen a lot of calls expire in the money. So watch to see how that capital flows around on Monday and Tuesday. You might see some rolling over, and you'll probably see these expirations for next week, for this week really, start to look a lot juicier. See a lot more options on this expiration that could fuel a lot more volatility. Now, let me give you guys a brief rundown of this week as far as economic data, things that are happening. Well, nothing is happening. It is a very slow week besides Wednesday. This is the mother of all catalysts. You're going to have the interest rate decision, the FOMC press conference at 2:30. Now, at 2 p.m., this is what's actually going to move the markets the most. It is the summary of economic projections. Now, the summary of economic projections, let me boil this down and just get straight to the point. In March, the Fed was expecting 0.4% GDP for 2023, was expecting 1.2% GDP for 2024. Let me tell you right now, these 2023 numbers do not matter at all unless you get a big move, in which I highly, highly doubt we will see. If for whatever reason the Fed was projecting back in June, that was the last summary of economic projections, by the end of 2023, Fed funds rates would be 5.6%. If the Fed were to come out and say 5%, implying we might get a rate cut or two by the end of this year, the markets would probably panic instantly and say, what the heck is going on in the markets, in the economy, that the Fed thinks they're going to cut rates twice by the end of this year. Okay, just easiest way to think about it. If something changes big in the 2023 numbers, you definitely want to pay attention. And that would be what caused the markets to fall, or at least could be really big. Now, 2024 is what's going to matter. 2025, not as much. As far as the GDP, the unemployment rate, PCE, and core PCE. 2025 is not going to matter there because you can't predict that far into the future and be accurate as far as GDP, as far as inflation or unemployment. But the federal funds rate will matter for 2025. So what you basically seen in March for the federal funds rate across the board was the Fed expects higher for longer. That's where higher for longer started to really gain traction. In March, the Fed was expecting 4.3% for the federal funds rate by the end of 2024. These are by the end of the year numbers. So by the end of 2024, by the end of 2025. The Fed expected 4.6% for the federal funds rate by the end of 2024. So up 0.3%, or 0.3%. Not great. The markets didn't like that too much, but it didn't show fears of a recession. But the GDP expectations actually fell from March's expectation of 1.2% to 1.1%. Now, you want to see in combination the GDP expectations from the Fed with the Fed funds rate. That is going to be what is the most important. For an example, if the federal funds rate goes from the previous projection of 4.6% by the end of 2024 down to 3.5% by the end of 2024, that's pricing in a lot more rate cuts, and the markets are going to say, hey, why is that happening? Then the markets are going to look to the GDP expectations. If the GDP expectations go to 0.1, 0.2, or negative, well, the markets are going to say, hey, the Fed sees a big problem. They expect to cut rates a lot. We should sell stocks. That's your bad case scenario. And don't be confused. If the Fed funds rate projections fall a lot, the markets will perceive that as bad news if it's coupled with GDP expectations coming down from the Fed. Now, your best case scenario is if nothing really changes. That's your best case scenario. Or if, the unemployment rate were to go down as far as the Fed's projection and the GDP to go up a little bit. That's your best kind of outcome here. Is actually no change to the Fed funds rate projection, because that will show the economy, at least the Fed thinks it will do well. So that's kind of your breakdown. That is, what you need to be watching for. As far as AMC stock, I don't know what's going to happen this week. It's hard to tell. You have the Fed on Wednesday. Monday and Tuesday could be quite red. They could be quite green. Now, historically speaking, we've Pointed this out many times. The pain in September, the seasonally weakness period in the market for September, which is the worst month for the markets historically. Well, if you look at data over the last 72 years, 71 years technically in this chart, the first half of September tends to be pretty good. What does it coincide with that causes this downside move? All of this. Quad witching. What do you know? Quad witching on Friday. You were down almost 2% on the NASDAQ. It tends to lead into a very rough end of September. A lot of that does have to do, running theory, of the fiscal years ending for hedge funds and institutions. A lot of hedge funds book profits, put on some new hedges for 2024. And it looks like that's what they did in full steam ahead on Friday. So that's not a great sign for markets heading into the next couple of weeks and really even into 2024. So keep this in mind. Markets tend to sell off after quad witching pretty aggressively. I think that can have an impact to the markets, and it could have an effect on AMC stock. Now, if all hell does not break loose and, stocks crash, AMC stock could easily make its way back to about $12 per share. You're due for an aggressive bounce here, right? This is just obvious. But I mean, there's the chance that markets sell off, AMC stock rallies. There's a chance markets sell off, AMC stock sells off. There's a chance markets rally and AMC rallies. So it's hard to really say with any definitive kind of conclusion, but I do think $12 per share is what I would be targeting. Anything $10 or higher is great news. Anything lower than $8 per share, bad news. Simplest way to put it. So that is going to do it for this video. If you guys want to come trade with us live in real time, come hedge out your portfolios every single day. We are making trades. Link down below in the description of this video. You guys enjoy the rest of your day and your weekends, and I will see you in the next one.